Cluster Accountancy Numerical Problem Solutions, presented by NCERT.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Past Adjustments Solutions, Problem 39 Solution. The problem statement is as follows. Mannu and Shristhi are partners in a firm, sharing profits in the ratio of 3:2. Following is the balance sheet of the firm as on March 31st, 2000 XA. As you know, the heading of the balance sheet will be Balance Sheet as on March 31st, 2000 XA. Let us have the columns for liabilities, amount in rupees on the liability side, assets, and finally amount in rupees on the asset side. Now on the liability side, we have Mannu's capital, which is 30,000 rupees. Shrishti's capital, which is 10,000 rupees. And then the total of these two capitals, which is 40,000 rupees. And then on the asset side, the drawings are given. Mannu's drawings are 4,000 rupees. Shrishti's drawings are 2,000 rupees. Total drawings are 6,000 rupees. And then any other assets total is equal to 34,000 rupees. And finally, the total on the liabilities side is 40,000 rupees. And the total on the assets side is 40,000 rupees. Profit for the year ended March 31st, 2000 XA was 5,000 rupees, which was divided in the agreed ratio. But interest at the rate of 5% per annum on capital and at the rate of 6% per annum on drawings was omitted. Adjust interest on drawings on an average basis for 6 months. Give the adjustment entry. So, as per the problem, we have to give the adjustment entry. As you know, we can record the adjustment entries in two methods. In the first method, we do this through the profit and loss adjustment account. In the second method, we do this directly in the partner's capital account. By the way, as nothing is specified in the problem, we assume that we are going to use the fluctuating capital method. Now, it is given in the problem that the interest on capital was omitted. Also, the interest on drawings is also omitted. So, if we follow the first method, we need to make multiple entries in the journal. Now, as it is explicitly asked in the problem to give the adjustment entry, indirectly it means that we need to use the method which requires only one single entry. I repeat, this is another way of saying that we should use the method that makes the adjustment through only one entry. This is nothing but the second method wherein we record all the adjustments in the statement showing the net effect of past adjustments, and finally we record only one journal entry in the journal. Now, it is specified in the problem that there are few entries omitted. The first entry that was omitted is that of interest on capital. So, let's first calculate the interest on capital in the working notes. Let's first write the heading interest on capital. Now, it is given in the problem that the partner Mannu's capital is 30,000 rupees and partner Shrishti's capital is 10,000 rupees. Also note that the drawings are not deducted from these capitals. These are given to us separately. Also, there is something that we should assume. As the drawings are given separately, I am assuming that they are not deducted from the capital. Also, for some reason, the profit is also not shown in the balance sheet. So, I am assuming that these are opening capitals. I repeat, I am proceeding with the problem by assuming that these are opening capitals and not closing capitals. Also, it is given that the interest on capital should be considered at the rate of 5% per annum. So, the interest on partner Mannu's capital is his capital amount of 30,000 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel both the zeros in 100 for 2 zeros in 30,000 rupees. Now, if we multiply the remaining 300 rupees and 5, we get 1,500 rupees. This is the interest on partner Mannu's capital. Similarly, the interest on partner Shrishti's capital is her capital amount of 10,000 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel both the zeros in 100 for two zeros in 10,000 rupees. Now, if we multiply the remaining 100 rupees and 5, we get 500 rupees. This is the interest on partner Shrishti's capital. As these interests were omitted earlier, we have to consider them now. So, we create the partner's capital account for each partner individually. Let us now record this in the statement showing net effect of considering past adjustments. Let us have the columns for details, amount in rupees for partner Mannu, amount in rupees for partner Shristi, and finally total amount in rupees. In the details column, let us first write amount which should have been created by way of interest on capital. This is the amount which was supposed to be created but not credited. For partner Mannu, this is 1500 rupees credit. For partner Shristi, this is 500 rupees credit. Now the total of these two credits is 2000 rupees credit. With that, we have completed considering the interest on capital which was not credited earlier. Now, as specified in the problem, the next item that was omitted is interest on drawings. To calculate this, let us first write the header interest on drawings. Now, it is given in the problem that the drawings made by the partner Mannu are 4000 rupees and the drawings made by the partner Shristi are 2000 rupees. Also, the interest on drawings should be considered at the rate of 6% per annum. So, the interest on partner Mannu's drawings is his total drawings amount of 4000 rupees multiplied with the rate of interest on drawings, which is 6 upon 100. This gives us the interest on drawings for a period of 1 year or 12 months. But we are asked in the problem to adjust interest on drawings on average basis for 6 months. So let us multiply this 12-month interest on drawings with 6 upon 12. Let's cancel both the zeros in 100 for two zeros in 4000 rupees. Now cancelling with 6, 6 ones are, 6 twos are. Cancelling again with 2, 2 ones are, 2 threes are. Now if we multiply the remaining 40 rupees and 3, we get 120 rupees. This is the interest on partner Mannu's drawings. Now, the interest on partner Shrishti's drawings is her total drawings amount of 2000 rupees multiplied with the rate of interest on drawings, which is 6 upon 100. This gives us the interest on drawings for a period of 1 year or 12 months. But we need the interest on drawings for a period of 6 months. So, let us multiply this 12-month interest on drawings with 6 upon 12. Let us cancel both the zeros in 100 for two zeros in 2000 rupees. Now, cancelling with 6, 6 ones are, 6 twos are. Cancelling again with 2, 2 ones are, 2 threes are. Now, if we multiply the remaining 20 rupees and 3, we get 60 rupees. This is the interest on partner Shrishti's drawings. Now, to reconsider the previously omitted interest on drawings, we should debit the partner's capital account for each partner individually. So, in the details column of statement showing net effect of considering past adjustments, let us write amount which should have been debited by way of interest on drawings. For partner Mannu, this is 120 rupees debit, and for partner Shristi, this is 60 rupees debit, and the total is 180 rupees debit. With that, we have completed the consideration of the entries that were omitted. Now, let's find the result of these amounts. Now, for partner Mannu, from 1500 rupees credit, if we subtract 120 rupees debit, we get 1380 rupees credit. For partner Shristi, from 500 rupees credit, if we subtract 60 rupees debit, we get 440 rupees credit. Now the total of these subtotals is 1820 rupees credit. See, there is one thing that we should understand here. There is no change in the total net profit. The only change is the form in which it should go into the partner's capital account. These 1820 rupees should have gone into the partner's capital account in the form of interest on capital and interest on drawings. But it is deposited or credited into partner's capital account as distributable profit according to their profit sharing ratio. See, we have wrongly deposited or created the partner's capital accounts. To correct this, we should debit the partner's capital accounts. Now, you might have a question that why should we debit? See, there is a overcredit of the profit share amount in the partner's capital account. To reverse this effect, we should debit the partner's capital account. Now, as you know, these 1820 rupees was wrongly distributed to the partners in their profit sharing ratio. So let us find out how this amount was credited to the partner's capital account in the form of profit share. Now it is given in the problem that the partners are sharing profits or losses in the ratio of 3:2. So using this ratio, let us find out how these 1820 rupees were distributed to the partners as profit share. Let us first write the heading loss sharing as per the loss sharing ratio. See, here it's not actually a loss. It is a decrease in the profit share to correct the overcredited profit share. You should understand it this way. Now for partner Mannu, this is equal to the overcredited total net profit, which is 1820 rupees multiplied with his profit or loss sharing ratio 3/5. Cancelling with 5, 5 ones are 5, 364 are. Now if we multiply the remaining 364 rupees and 3, we get 1092 rupees. This is the amount of profit share that should be debited from partner Mannu's capital amount to reverse the overcredited profit share. Now for partner Shristhi, this is equal to the overcredited total net profit, which is 1820 rupees multiplied with her profit or loss sharing ratio 2/5. Cancelling with 5, 5 ones are 5, 364 are. Now if we multiply the remaining 364 rupees and 2, we get 728 rupees. This is the amount of profit share that should be debited from partner Shrishti's capital to reverse the overcredited profit share. To correct this, we should debit the partner's capital account with these amounts. So let's write the description of this entry as the amount that should have been debited by way of profit. This is 1820 divided in the ratio 3:2. See, we usually don't debit the profit, we credit the profit. But here we wrote that this is the profit that should have been debited. This indirectly means that we are reversing the overcredited amount. I repeat, indirectly this means that this much amount should not have been credited. Here we are considering the not crediting as debiting. In other words, we are reversing the effect of overcrediting by debiting. That said, partner Mannu's capital account should be debited with 1092 rupees. The partner Shrishti's capital account should be debited with 728 rupees. Now the total of these debits is 1820 rupees debit. And now finally the required adjustment that should be made is calculated. This is the difference between the item 3 and 4 above. Now for partner Mannu, the difference between 1380 rupees credit and 1092 rupees debit is 288 rupees credit. See, this amount is credited because overall this much amount was shortage and was not credited earlier to this partner's capital account for partner Mannu. Now for partner Shrishti, the difference between 728 rupees debit and 440 rupees credit is 288 rupees debit. See, this amount is debited because overall this much amount of excess was credited earlier to this partner's capital account for partner Shrishti. Now after preparing this table, these final required adjustment entries will go into the journal. So let's first prepare the journal format. Let's first write the partner Shrishti's capital account as the debit entry. Let's also write the text DR to indicate that this is a debit entry. Let's then write the debit amount of 288 rupees in the debit amount column. Leaving a margin, let's write partner Mannu's capital account as the credit entry. Let's then write the credit amount of 288 rupees in the credit amount column. Let's then write the description or narration of this transaction as being adjustment to the profit for omission of interest on capital and interest on drawings. If you notice here, we recorded all the entries in the partner's capital account. No other account is touched. So with that, we have completed the recording of the adjustment entry with the second method to record the adjustments directly in the partner's capital account. And with that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.